Hello, thank you so much for joining me this evening. My name is Kendra Ferguson. I'm a CPA and I serve construction companies and I do bookkeeping, CFO, and advisory services for those construction companies. I'm really excited that you've decided to join me tonight. Leave a comment and let me know where you're coming in from so that we can, get to know each other a little bit. And the structure for tonight is I'm going to go through a few things about why your bookkeeper may actually be hurting your construction business. And if that is something that you're interested in, then I think you're going to get a lot out of the training that we're going to do tonight. So feel free to leave a comment, ask any questions as we're going along. And as I see your questions come in, I'll pop in and answer them as well. So be sure to let me know where you're at and feel free to just comment as we're going along. So tonight we're talking all about why your bookkeeper may actually be hurting your construction business. And that may sound a little bit provocative, but I have a really good reason for saying this and for wanting to do this training. I've seen many construction company books where it's obvious to me that the bookkeeper just is not an expert in construction. And unfortunately, if that's a situation that your company is in, it's likely costing you time, money, and causing you a lot of additional stress. Hey, Shanita, coming in from Delaware, thanks for joining. So what we're going to talk about specifically are some red flags that you might see in your own books that might tip you off that maybe your bookkeeper is not necessarily an expert in construction. And then we'll talk a little bit later about what you could do if you think you might be in that situation. So diving right into it, the first thing, hey Mark, coming in from New Jersey, thanks for joining. The first thing I wanted to talk about was if you're getting inadequate job cost details. So we know that job costing is really the most important thing for a construction company, to be able to know how profitable you are in doing your jobs and how great or not so great you are at estimating your jobs. So I wanted to share my screen really quick and just actually show you an example. So this is an actual example job estimate versus actuals detail for a job. This actually comes from QuickBooks Desktop. You may be using a different accounting software and that's totally fine. This is just to give an example. So the way that this is set up is that each phase of your job is kind of set up as actually a parent item in QuickBooks Desktop. And then you have different sub phases, so you can tell the different components that's making up this phase. And what's really helpful in this situation is that if you're estimating to this level of detail, so for example, site work, you've got an estimated cost for labor, you've got an estimated cost for materials and also subcontractors, you're going to be able to actually track those actual costs as they come in to be able to know if you're close on your estimate or if you're not close at all. So if you don't have your job codes or your cost code components or your items in QuickBooks set up properly to be able to match the level of detail in your estimates, you're going to have a really hard time at the end of your job going back and trying to match the actual cost to the estimates. Does that make sense? So this is actually a really good example. This is an example from a general contracting business that has many different phases all throughout the life of actually building a new home. And this is really just great because you can easily spot where, one, you might have an issue in running over, or if maybe there's a cost that hasn't been properly accounted for, you can spot all those things by being able to utilize this job estimates versus actual report. So if you don't have this set up, that's a red flag that maybe your bookkeeper doesn't necessarily understand construction. So let's move on to the next thing. So in addition to there being inadequate job cost details and you not being able to know how well you're doing in terms of estimating and then actually performing your jobs, the next thing that I see pretty often is that the P&L, your profit and loss statement or your income statement, doesn't easily identify all of your job related costs. So you want to have your profit and loss statement set up so that at the top, you've got your income that's coming in. The next section are your direct job-related costs, which in QuickBooks, they generally go into the cost of goods sold section. And you want to make sure that everything that is directly identifiable to a job is going into that section. So I will share my screen again with another example. Let me get that up really quick. So here's an example of one that's set up really well. So you can see the income's at the top, and then the next section is cost of goods sold. And this one actually has it set up to capture job labor and the specific components of job labor, the payroll taxes, the actual gross wages or salaries, workers' comp, and any other costs. That's all being lumped together into different categories and then coming together to a total job labor cost. And then additionally, there's another section for job-related costs, which would include your materials, your subcontractors, and you can actually set those up as different line items on here if you want to break that out into that level of detail. So that actually gives you your gross profit number. So you want to go from income to subtracting all of your direct job-related expenses or cost of goods sold to come up with your gross profit number. And then below that is where you would record any expenses that aren't directly identifiable to a job. So these could be things like your payroll expenses for any office employees you have who aren't doing anything specifically related to the jobs that you're working on, and many different types of categories. But if it's not identifiable to a job, then it would go in this section down below. So I see often, the thing that I see the most often is when payroll is actually below the gross profit line, and they're not actually, people are not actually allocating their payroll expenses back up to cost of goods sold, even if they are directly identifiable to a job. So that's the next thing. Let me know if there are any questions. Those are the two really technical construction specific things that I wanted to mention in terms of things that you can look for to maybe tip you off that your bookkeeper may not necessarily be an expert in construction. The next couple of things that I wanted to talk about were a little bit more broad. So these are things that you might be able to consider even if you're not in construction. And the first one is, let's say your bookkeeping is not timely. So it's really important, especially in today's environment when material costs are fluctuating all over the place, that you've got accurate financial information so that you can make sure that you are able to adapt. As costs are increasing, you've got to also, make sure that you are accounting for any change orders or you're staying on top of that. And if your bookkeeping is not up to date, you're going to be behind the game and you could easily be losing money. I see this pretty frequently where you've got a bookkeeper and they're not really on a strict schedule. So sometimes they can get a little bit behind in the bookkeeping, and that's just frustrating. So Shanita said, if our bookkeeper isn't doing it this way, is it too late? Can you help? So going back to the setup of the job cost details or the P&L, yes, I can definitely help with that, Shanita. Thank you for asking that question. It's definitely not too late. We can definitely make changes to get you set up. It's never too late to try to get things on the right track to make sure that you're getting the information you need to make great financial decisions for your business. So thank you for asking, Shanita. So going back to your bookkeeping not being timely, the thing that I like to do with all of my clients is implement a really strict month-end close process. So what that means is we have a timeline of events after the end of a month where we're making sure we've got all the invoices that relate to the previous month. We're making those accruals. We're making sure the bank reconciliations are done very quickly after the end of the month, and just getting everything in there and having a hard deadline so that we know everything's in there. We're going to move on to the next month. And that just really helps you make sure that you're staying on track and you generally know what your financials are at any given point in time. So that's a common thing. I really like the month-end close process. I don't see that happen in a lot of instances, specifically if you're in a situation where maybe you've got an in-house bookkeeper. Sometimes if you're not, really under pressure to get your books closed, then it's easy to kind of let it go on and kind of just drag out. And I definitely don't recommend that. So the next thing I wanted to talk about that might be a red flag is that just your bookkeeping just isn't accurate. And there are a range of things that I've seen in looking at construction company books that have tipped me off to the books not being accurate. But here are some examples. So if your bank account, and in your bank, you've got a certain balance, and let's say your bank account is showing as a negative, that's a huge red flag that your bank account isn't properly reconciled. Other things that I typically see is when I see in the accounts receivable aging detail, there's really old accounts receivable out there that just hasn't either been properly applied or maybe it just wasn't properly billed correctly in the first place. So that's something I see pretty frequently, both on the accounts receivable side and also on the accounts payable side. So just making sure that your AR and your AP is current and accurate and up to date. Other things I see are negative liabilities. So if you've got a negative number showing in your liability section, that's generally an incorrect thing that would be a red flag to you. And on the P&L or the income statement side, other things would be if you've got a negative amount showing in revenue. That would be opposite of what we would generally think. We want to make sure that you're making money. And same thing in the expense section. If you're showing negative expenses, that generally is probably not correct as well. And these are things that are easy for someone who's trained like me, and I review books all the time, and these kind of things just pop out to me frequently. So maybe you're struggling a little bit with being able to know, maybe you've got an inkling that your bookkeeper may not be keeping your books really accurate. Someone like me would be able to hop into your books and kind of be able to spot some of those things pretty quickly if there is potentially an issue. Let me know if there are any questions about that. And actually, that is a good segue. So I hope that this information has been valuable to you and that some of these red flags that I've seen in actual construction companies' books, one, I hope it's not happening in your company, but if it is, I want you to know that there's help. And that actually, this is the point in time where I'm actually going to make you an offer and ask you for money. So I'm actually doing a limited time offer where I'm going to do a profit diagnostic for your business. And what that entails is we will get on the phone or do a Zoom call and talk about your business. And I'll talk to you about how to give me access to your books and some of the other files that I would need to review. And then I'll go away and I'll actually do a complete review of your books. I will review your profitability. I will look for some of these red flags in terms of your account setup, making sure that you're properly accounting for your job costs and that your job cost setup is really capturing the data that you need it to capture, making sure that your estimates are being properly reflected in your job cost reports. And I'll go away and do that, and then I will come back to you and we'll have another meeting, preferably on Zoom, so that I can share my screen with you. And I'll actually show you the things that popped out to me that showed up as either a red flag or potential opportunity, or just things that come to mind. So if that is something you're interested in, then I will pop a link into the comments so that you can actually sign up for that. That is $750, and you can just sign up real quick, enter in your credit card, and then you'll get a link to book a time on my calendar so we can get you started. And I would love to hop into your books and just be able to help you identify opportunities where maybe you're struggling a little bit. So if that's of interest to you, please click the link that I'm going to pop into the comments right now. And let me know if you have any questions. I'm always available to answer any questions, so send me a DM or you can get in touch with me, many different ways through my Facebook page or my website. So I hope that this has been valuable to you, and please let me know if you have any questions. And if you're interested in that profit diagnostic, I would really love to help you out. So thank you so much for joining, and I'm going to call it an evening. Thank you.